Chair Powell, let me start by reiterating a point that I've made, unfortunately, far too many times. And the latest batch of nominees leads me to, once again, the conclusion that there is a serious diversity problem at the Federal Reserve. Latinos are the country's largest minority. They make up nearly 20% of the entire U.S. population. It's outrageous that they have no representation in Fed leadership. There's never been a single member of the Board of Governors or regional bank president that has lived the experience of being a Latino in the United States. And that means that the voices of 1/5 of the country's citizens are repeatedly drowned out when the Fed is making critical decisions on economic policy, decisions that affect whether a Latino family can afford their first home, find a job that pays a living wage, send their children to college, save for a comfortable retirement, or get a loan to expand their business. In late October, several of my colleagues and I sent you a letter requesting that you work closely with the Boston and Dallas banks to recruit diverse candidates for their open president positions. We received your response to that letter just last week, and I have to be honest with you, the lack of detail was thoroughly disappointing. I'd be expecting you to provide a more detailed update on the search process before your confirmation vote, including what specific changes you've made to the process and how they're going to lead to a more diverse candidate pool, and I hope that you will do that. While we face significant challenges with the Omicron variant and supply chain disruptions that are both causing families to face higher prices for a variety of goods, the fact is that we're experiencing a strong recovery from an unprecedented pandemic. Thanks to the American Rescue Plan and other policies put in place by Congress and the Biden administration, we gained an average of 537,000 jobs per month since President Biden took office. So, Chairman Powell, if you're confirmed, how would you continue to balance the Fed's dual mandate to keep price increases manageable while not dampening the strong job and wage growth that we've seen over the past year?
So by so many measures, labor demand relative to supply is at its highest level, really, that I can remember. The level of job openings is at an all-time high as a percentage of the labor force. The level of quits labor economists look at the level of quits as a real indicator of how strong the labor market. The percentage of quits, the number of quits, is at an all-time high. So the problem is not lack of demand for labor. The problem is that there's a significant supply problem, which is associated with the pandemic and a range of other factors. Participation has not recovered, but as you can see, for people who are in the labor force, the unemployment rate is dropping at historically fast levels. So we don't have a labor demand problem to solve through our policy. What we have is a labor supply problem. So what is the threat? We're clearly on a path to have an even better labor market over time. What are the big threats to our getting there? Well, I would say very near the top of the list is the threat of price stability. If inflation does become too persistent, if these high levels of inflation get entrenched in our economy and in people's thinking, then inevitably that will lead to much tighter monetary policy from us, and it could lead to a recession, and that will be bad for workers. So really, achievement of maximum employment, by which we really mean continued progress in hiring and in participation, is going to require price stability, and that's going to require us to use our tools to the extent they work on the demand side, while we also expect some help from the supply side.
Do you expect inflation to subside as vaccinations increase and supply chains are repaired?
Over time, yes. Over time. The question is how fast, and the risks that we're running in the meantime that inflation psychology starts to get entrenched. But certainly I believe that. And you make a great point about vaccination. Getting ahead of the pandemic, I mean, I don't think 2 years ago we thought we'd still be having record levels of cases and even close to record levels of hospitalizations. Getting past the pandemic is the single most important thing we can do.
Now, finally, according to the New York Times, New Jersey and other parts of the Northeast were hit particularly hard at the beginning of the pandemic and during the most recent surge, while the Midwest was most strongly affected in November of 2020 and the South at the end of last summer. How closely does the Fed look at differences in regional performance when making policy decisions?
We have to focus on the national level, but of course we follow, in this instance, the earlier Delta, for example, kind of COVID rolled around the country on a regional basis. That's not so much the case with Omicron. It's so contagious, and it's not the same everywhere, but it really is going through the whole country at a pretty rapid rate. But we follow that very, very carefully. You know, I would say we didn't know much about vaccines and pandemics 2 years ago, but we've all had 2 years to learn. So, but we defer to the experts, though. We don't substitute our judgment on medical issues for the experts, but we talk to them all the time.
All right. Well, I look forward to following up with you on the diversity question. Thank you, Mr. Chairman.